Funding for Market Journal is provided by the Nebraska Soybean Board.
No matter how you look at it, animal agriculture helps Nebraska's economy. The livestock industry provides increased tax revenues for schools and community services. Livestock enterprises also create jobs while contributing to existing businesses such as local banks and grocery stores. A thriving livestock industry helps maintain our current way of life, but also provides opportunities for the next generation of farm families. The Nebraska Soybean Checkoff helps to raise awareness of the importance of animal agriculture to Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. This week, we're reporting from the 2012 Nebraska Power Farming Show at the Lancaster Event Center in Lincoln. This is the second largest indoor farm show in the country, with over 9 acres of indoor displays. More than 900 companies here represent 23 states and 4 Canadian provinces. There also happens to be, from our research, a lone television program displaying for this show's 3 days. On the program this week, Ron Plain analyzes the hog markets. Jim Blazek discusses estate planning. Mark Olinyk talks about the benefits of wind and solar power, and Nick Mueller looks at an overview of the grain markets. Ron Plain is our hog marketing analyst this week. For farrow to finish producers, losses increased to nearly $43 per head for the week ending November 30th. As we approach the end of 2012, we asked Ron Thursday what the yearly numbers look like for cost of production and losses per head.
Not very good, Jeff. It looks like we're going to have a new record high cost of production this year when all said and done, somewhere around 66, 67 cents a pound on a live weight basis cost of production. Losses for the year are probably on average somewhere in the $15 to $20 per hog range.
So when you see those numbers, Ron, what gives you hope as you look into 2013?
Well, we're cutting the herd, and hopefully it'll rain next summer and feed costs will get lower. A lot of red ink in the livestock and poultry industry this year because of high feed costs, and so numbers are down. Farrowing intentions for this fall was down 2.7% for the winter, down 1.5%. So expecting hog slaughter down next year. USDA is forecasting 1.4% less pork next year. Beef down also, chicken down also, turkey down. In total, 2.2% less meat next year than this year. And so that makes us think prices ought to move higher.
Those numbers, Ron, do those compare, are those month to month or those year to year? I mean, I'm just trying to get the scope of what the drought has done so far this year.
Well, those are year over year changes, and you know what the drought did was push us up to record corn prices, record soybean meal prices. We had corn above $8 a bushel for a while and bean meal above $550 a ton. Led to a lot of red ink for meat producers, and so across the board we're looking at cutbacks.
All right, let's look at the meat then, because one of the concerning things that came out this week was the Restaurant Performance Index at its lowest level in 14 months. They measure things like cost, the traffic that they get in the restaurant. So is that a concerning thing if you're producing meat?
Yes, it is. You know, consumer demand is huge, and consumers' willingness to pay these higher prices. As I said, meat production is declining. That's hopefully going to mean higher prices, not only for meat, but also for the livestock and poultry that produce that meat. So any indication that consumers aren't willing to pay higher prices, aren't willing to go to restaurants and pay for these cuts of meat, that's certainly worrisome for the livestock and poultry industry.
You mentioned corn prices before. Stocks are incredibly tight here. When do you expect to see relief?
Well, I'm hoping we have a nice wet summer next year. I mean, that's the key. It was incredibly dry in a huge chunk of the Midwest. In fact, the most widespread drought since the 1950s here in 2012. We need normal weather next year. We're probably going to plant a bit more acres of corn next spring than we did this year, and we planted more acres this year than any year since 1937. If we can get rain June, July, that should push us above 14 billion bushels on a corn harvest next fall, and that should give us a lot of price relief for the livestock producers.
Give me your thoughts on the export market. What's the strength there?
Well, we're up almost 8% in pork exports for the first 3 quarters of this year. It's a very good sign. Doing well in a broad range of countries. A lot of that simply has to do with world economic growth being faster than here in the U.S., and also with the fact that the U.S. dollar is weak compared to foreign currencies, which makes U.S. meat products look attractive in the world markets.
The economy, though, isn't that also a concern?
Certainly, you got to worry. The domestic market's the big factor, of course, in meat demand, and you got to worry with all the turmoil in Washington on the fiscal cliff, and whether or not we're going to generate economic growth. Without that, then even with tighter meat supplies, we may find consumers not willing or not able to pay higher prices.
Give me your price outlook here. We're into December. What do you expect to see at the end of the month and then as we enter the first part of 2013?
Well, carcass prices on hogs have been in the mid-80s here lately. Seasonally, this should be about as low as it goes for the time being. You should expect prices to improve. I would expect we'll probably have some days with carcass prices at $100 a hundredweight or $1 a pound by late May. So a pretty steady increase as we move through the first half of 2013.
We'll have thoughts on the grain markets from Nick Mueller later in the show, and next week Mike Briggs will take a look at the cattle markets. As Congress attempts to avoid the so-called fiscal cliff, one tax component has a strong tie to agriculture. The current estate tax stands at 35% of an estate with a $5.12 million exemption. If Congress does nothing before January 1st, those numbers will roll up to 55% of a tax and a $1 million exemption. And the president has proposed taxing an estate at 45% with $3.5 million exempt. Although those numbers might change in the future, estate planning attorney Jim Blazek says the key is to just start thinking about protecting your assets.
Jeff, I'm a big advocate of planning when you're thinking about it. The cost of procrastination is so high that it needs to be done when you're willing and able and have time to do it. Whenever you have sufficient property you want to protect, loved ones you want to protect, it's a good time to do estate planning.
One of the things you said today is you're kind of advocating against traditional planning because you sort of miss out on some of those dollars. Explain more on that.
We've seen lots of clients, Jeff, that have used traditional planning strategies, and the traditional planning strategies cause you to waste your opportunities. A lot of times clients will have a simple will where it just gives everything to the surviving spouse. That will waste your death exemption. Whatever your death exemption is, it's wasted with that kind of planning. Also, you lose your opportunity to do generation skipping planning. It wastes your generation skipping exemption. In addition to that, it wastes your opportunity to protect property in the hands of your loved ones, to protect it from a new spouse or from a child's divorce.
You said generation skipping. That's one of the biggest mistakes people make. What is it about it that's so complex or confusing?
Well, generation skipping has a difficult name. It misleads you into thinking that it's something it's not. Whenever anybody would hear the phrase generation skipping planning, anybody would assume you're skipping your children. And most clients don't want to skip their children. In fact, it's great that probably 99.9% of all of our clients, are very, very family oriented. They want to take care of their children.
I'm glad to hear that.
So
I'm glad to hear that.
They don't want to skip their kids, but they're wasting their opportunity to pass property to their children in such a way that it's never taxed in their estates. Generation skipping planning is very important for farm families to keep it out of the hands of the IRS for generations.
What changes in 2013? 2012 is now 35% tax on estates with a $5 million exemption. What changes in 2013?
Well, under the current law, come 2013, the death exemption and the generation skipping exemption roll down to $1 million per decedent, and the rate of tax changes from 35% to a new rate of between 45% and 55%. So we have some heavy tax changes coming down the pike come 2013.
And the problem is, if you don't know when you're going to die, you don't know how to plan for it. So how do you plan on what could be in place when you do pass on?
We are advocates of what we call a self-adjusting trust. We anticipate that the law will always change. In fact, the focus of 2013 is maybe a little misplaced because most of our clients are not going to die in 2013. The question is, what is the law going to be in 2023 or 2035? And so we advocate planning that will self-adjust. We like self-adjusting trust so that no matter who dies, no matter when they die, no matter what the law is when they do die, we achieve the best tax result for our clients.
You say it's important if you're going to think about life insurance to do it this year yet in 2012. Why is it so important?
Well, there's new federal law that changes the reserve requirements for insurance companies next year. So insurance companies next year will have to maintain a higher reserve limit to back their policies. That will cause an increase in rates. So we are telling people that if you want life insurance to be part of your plan, to get that insurance applied for this year while you're under the old current rates, and don't face that maybe 10 or 15% rate increase next year.
Jim says the easiest thing to do when you're thinking about mapping the future of your estate is to call an estate planning attorney and ask if they do free consultations. This year's Nebraska Soybean Day Machinery Expo in Wahoo features a well-known national speaker and research on yield impacting issues. UNL Extension educator Keith Glewen previews the December 14th event.
The Soybean Day has a long-term history, and we sit down with the soybean growers and we visit about topics and questions that are important to next year's growing season. One is the application of fungicides in the production of soybeans. Another topic of interest is seed treatments in soybeans. This is a very significant technology that's come about in the last 15 or so years. In addition, this year we have on the agenda Dr. David Cole, a very dynamic speaker, and David's going to touch on the aspects of today's economies in the world and how that affects our world of growing soybeans.
The Soybean Day and Machinery Expo will be held December 14th at the Saunders County Fairground in Wahoo from 8:30 to 2:30. The event and lunch is sponsored by the Nebraska Soybean Board and UNL Extension. A feature of the Power Farming Show is a group of seminars put on by businesses and educators. One of those talks focused on the future of energy in farm and agricultural production. Mark Olinyk from Harvest Energy Solutions spoke on the energy panel about the challenges and benefits of wind and solar power. He sees a bright future for solar, no pun intended, but some challenges for wind. On a large scale, China is the leading country in wind power capacity. The U.S. ranks second. While the sector continues to grow, it also faces uncertainty in the expiration of a federal wind energy production tax credit. The number of small turbines for homes or farms or businesses actually declined in 2011. We talked with Mark Wednesday about the future for solar and the current challenges in the wind energy production.
The challenges for, well, you probably want to specify big wind compared to small wind, but let's talk about big wind. The challenges of big wind going forward are costs in transmission. Transmission is huge. When you've got a big wind project in Nebraska, for instance, you don't have the big cities that really need the energy. That energy needs to be shipped to at least Omaha, probably Chicago and beyond, East Coast ideally. And the transmission the costs are huge.
What about infrastructure?
Well, the infrastructure that's there isn't strong enough, isn't big enough for it. And so the infrastructure, the transmission lines, that's probably half the cost, sometimes more.
And the turbines?
The turbines, the cost keeps coming down, but very slowly compared to other sources like solar. The solar costs have come down dramatically in the last few years, whereas wind has come down, but not as fast.
So small scale, I'm sure there are some farmers who use it on their operation, but is it more difficult to pay it off for wind?
For wind, the smaller the turbine, the higher the slower the return on investment.
So for farmers, do you have a lot of farmers that use it?
We have many more farmers using solar than wind.
All right, what's the appeal of solar then?
The appeal of solar is that our typical product has a 25-year production warranty as opposed to wind, which has 5. The initial cost of installation for solar has come down dramatically in the last 3-4 years to where 3 or 4 years ago, it may have cost $8 a kilowatt installed. Now it's down to about $4 a kilowatt installed, whereas wind hasn't come down at all.
What are the logistics of solar, the cost to put it in, the space that it takes up? If you're going to do this on your own operation, what would it take?
I'm sorry, for solar or wind?
For solar.
For solar.
Excuse me.
Everybody seems to be a little bit concerned about solar because of the space that it takes up. But at Harvest, we focus on wind and solar for farmers in the Midwest. We understand farmers, they have space, and when we say, well, it's going to take up about 120, for instance, a 20 kilowatt system may take up 100 feet in length and about 12 foot in depth. Sounds like a big area, but there's always space behind a barn or on a barn or adjacent to some place where you need electricity, and the space really isn't that big of an issue, even though when you first start talking about space, it's a concern.
What can you get from your return there? How much energy can you get back, enough to power what on the farm?
Well, again, it depends on how
Sure.
much, what your investment is
Sure.
and what size. A typical household in the United States uses about 12,000 kilowatt hours a year. And in Nebraska, that's about a 10 kilowatt system. But typical farmers don't live in an average home. They'll use more. I've got a small wind turbine at my house, and I'm putting in a 20 kilowatt system, solar system. And that'll probably take care of most of my needs.
You said yesterday during the panel discussion that China was having a big impact on cost. Why is that? What's all playing in there?
As with most industries, the Chinese are getting involved with the manufacturing and production of solar panels and other components. When they do that, typically the Chinese government is involved with those businesses, subsidizing those businesses, letting the prices go down. And as the prices are lessened, it forces the competition in the United States to drop their prices. Therefore, it's forcing the price of solar down.
The Wall Street Journal expects the U.S. solar panel market to double this year, but believes tariffs on imports from China could slow growth in 2013. Corn stover is gaining wider use as a roughage source for cattle. In the December Nebraska Farmer, you can read about another development in this trend. Treating stover with calcium oxide and water after grinding breaks down fibers and makes them more digestible. While there are several ways to make the treatment, the December Nebraska Farmer reviews one method shown during a demonstration north of Minden. The treated stover is mixed with wet distiller's grain to replace some of the corn in the feedlot ration. You can read more about the practice in the December Nebraska Farmer. We talked with Nick Mueller from the Stewart Peterson Group Thursday morning about the outlook for grain markets for the rest of December and then into 2013. While there's obvious and much publicized economic uncertainty before January 1st, we started by asking Nick how much of an effect that could have on grain markets.
I think it can have quite a bit. Right now, if you ask me my opinion of the overall economy, I'm concerned like everyone else. But I don't think just having a concern of a slow economy affects grain markets. I think tight ending stocks overrule that. But I do have a concern of the fiscal cliff. I think you've seen funds liquidate, especially in the bean markets, off concerns of the fiscal cliff. And now it's wait and see. If we go over, I think it hurts all grain markets with investment money pulling off, kind of a risk-off situation. If we don't go over it, I think there's buying to be had from money they took out of that market already.
Does the length of it, I mean, if they don't strike a deal until the end, does it impact it at all here in the next week or two?
I don't think so. I think the money's been taken off the table, to account for that risk, and now it's wait and see.
I went back and watched our interview from last year's show, and it's ironic because at that time, you said the common question you were getting was if producers missed their highs. And at that time, we didn't know about the drought that was going to be coming this year, which was obviously something that was of historic proportions. But this year, is that almost the same question? Have you missed your high going into 2013?
I think it is, and I think, that might be the question we have every year at this time. Personally, I think we're forming a near-term top in the markets. I would expect a pullback through December. We still have export competition out of South America, and it just feels like the market's a little exhausted at the top of this range. That being said, barring things unforeseen like a fiscal cliff, I don't think we've missed the highs yet. I think there's going to be opportunities yet through this winter. I think China's demand has not slowed, and I think we need to ration this tight crop.
That was my concern because a lot of analysts believe that the spring high would actually probably surpass what we saw so far. So you think that is still an option?
Absolutely.
Yeah. In corn as well?
Yeah. Especially, I think, again, more than anything, we need to put premium into 2013, given the drought that's going to continue through this winter. I still think the opportunities for 2013 are new highs.
If South America does do well, they're just kind of putting it into the ground now, just getting finished in some areas. When could that really affect the market, bean market we're talking here, obviously?
I don't think till late spring. I think so. I think there's this window as we get through January 1st and probably the end of January where February, March timeframe, we're really just going to be trading our market, is really what I believe. And I think this is a crop that needs to be rationed, and it's going to provide opportunities for producers yet.
What range does corn have here? I mean, it's been sort of stagnated here for a while. What moves it?
What moves it is a decrease of competition on the export market, which I think happens, again, towards that end of January. The demand is still out there. I think the world needs to still secure grain overall in beans and corn. And that competition's just not going to be out there late in the first quarter, and we're going to be the ones to provide it.
Before I ask you about old and new crop advice, what are you expecting to see from acres? Informa is expecting a huge number in all three commodities of corn, soybeans, and wheat. What's your expectation?
I agree 100%. You know, the acreage question, it's a good question. We talk about it a lot right now, but mostly because there's nothing else to talk about. It all comes down to yield for production. So yeah, I think everyone can expect huge acreage. Doesn't mean we have a bumper crop, you know.
Old crop advice, corn and soybeans?
If you want something sold before January 1st, I think you got to be doing it now. Otherwise, be cautious. Be cautious. I think we make new highs, but be cautious of the fiscal cliff. That changes the game. Be cautious of Europe. That changes the game, and probably be cautious of Israel. That might be a game changer where we see some risk off in the markets.
New contracts or contracting the new crop, when do you start to think about that?
Well, we just missed it when 2012 put in its highs. We had some orders working, and they just missed. I think you got to, it's hard when a producer looks at his ROI or even his ROA, it's hard to look at 640, 650 corn going into next year and not feel like, I mean, as a responsible producer, I should be doing something. And I think you do need to be doing it, I think at a very small percentage. And I think you need to be looking at option strategies that give you a 640 to 650 price floor and a $7.50 to $8 price ceiling. And that's what we've been working with our producers on, is using those options, because we do think we'll see higher prices, but being responsible, we still need to be starting to average a good price.
And what about soybeans?
Soybeans, same thing, absolutely. Small sales, small forward contracting, there's a good return on investment there. But if we can use option strategies, we'll be working with them on that.
Quick question on wheat, if I may. This drought that's currently decimating the crop, really, can that drive the market for a while?
In the near term, I don't think so. I think this market is really getting stagnant, like you said, with the recent run. I don't think it's ready to break into new highs. Again, we get through the first of the year, into that first quarter, absolutely.
December crop report out next Tuesday. Any surprises there? Any major market movers you foresee?
You never know. That's usually when a surprise comes. I don't think so. I think the trade just wants to get through it, and then I think you're going to see the market buying dips on anticipation of a large decrease in harvested acres, especially for corn, on the January report.
Now with his weekly weather forecast, here's UNL Extension state climatologist Al Dutcher.
Well, folks, here we are again in time for the weekly forecast. Before we get to the main forecast, of course, we'll take a brief look at what happened over the last week, and really nothing major in terms of precipitation. We had a little system that moved through the upper plains as we got into the late Wednesday into the Thursday timeframe that dropped a few sprinkles and light rainfall across northern Nebraska. Some of that did come into east central, southeast Nebraska, but it was basically nothing more than sprinkles. We did have some very warm temperatures earlier in the week, but now we're starting to see this cold trend as we have a storm system developing in the northern plains region and the front range of the Rocky Mountains. It's going to slide toward the southeast and impact us over the next 24 to 48 hours and possibly give everybody that hasn't received accumulating snowfall their first chance for what we would call a measurable snow event, which is at least 1 inch of snowfall. So let's get immediately right to the models and see what's going on and what we might expect through this next 7-day period. Here is the trough that is starting to move down. The main energy this morning is situated over South Dakota, we would expect that the precipitation shield will build south and eastward as the day progresses, and possibly starting to see some light snow accumulations across the northern part of the state, particularly in the afternoon and the evening hours, and then that will slide toward the south. And then we have another piece of energy that's going to round the bend as this trough deepens and pulls the cold air into our region that possibly will generate some accumulating snowfall as we go through the day tomorrow. So by tomorrow, what we are expecting is here comes that trough. A lot of the core energy slides down into New Mexico, but there will be sufficient energy for lift, and we should generate 1 to 2 inches of snow. Pay attention to this forecast models because it could change rather dramatically, and this may actually produce more snow than is initially forecasted. But overall, we should see the snow becoming to an end across the west during the afternoon hours, and by the time we get to Monday morning, most of the major energy will slip into the eastern Corn Belt, and we'll see clearing conditions developing, and then we'll stay cloudy with a very cool air mass in place where we'll barely get above the freezing mark across southern Nebraska. Now as we go into Tuesday, what we'll notice is that cold air pivots. We'll start to see some warming air build in, and we'll have a couple nice days, particularly Tuesday, and especially on Wednesday as that high pressure system shifts toward the east, and yet another trough starts to make its way into the western United States, and then actually break out some snowfall as early as Wednesday evening across extreme northwestern Nebraska, north central Nebraska, and some of that will slide back through the state as we get on Thursday. So here's the Thursday forecast. As you see that energy driving down, might bring some moisture up into our region, and we'll start to see the snow starting to fly across the western part of the state and fill in across the eastern part of the state, particularly during the afternoon hours. And by the time we get to Friday, here comes that piece of energy that may cause some lingering snows across the southeastern part of the state, and this will need to be watched because this is a storm track that's favorable for heavy snowfall accumulation if it does verify. Overall, in terms of the 8 to 14 day forecast, do keep the warmer air to our east as we get that trough building in. In terms of precipitation, they are showing a core area of below normal precipitation, but I think this might be overdone, but definitely above normal to our north. In terms of our temperatures and our precipitation, we will see the temperatures will continue to cool with chances of snow tonight and Sunday. Then we'll see a clearing trend, a little bit warmer as we get into Wednesday, and then we see the temperatures drop back out as another system moves in with a chance of snow.
Thanks, Al. To see our interviews on hog and grain markets, estate planning, or wind and solar power, you can log on to the Market Journal website or YouTube page. Next week, Mike Briggs will give us his thoughts on the cattle markets. Until then, from the 2012 Nebraska Power Farming Show, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.